Hello guys, glad to have you on board again. Today we finally have something to talk about regarding the Bitcoin. It's still a little bit too early to consider this 100% validated. As I said, as long as we remain below 7,200, there is nothing to be excited about, so it's just kind of a wait and see approach right now, still at play, but we do have some interesting candle close yesterday. So what today we'll do is pretty much interesting. So we've got either we barely have two choices. There's always more than two choices, but let's say the two biggest options, the two most probable options really are either we strongly invalidate yesterday's candle by making a bearish engulfing and basically reintegrate the range ASAP, and we just throw away the attempt of getting some volatility out there, just basically what we've done back then, making a daily candle close below the resistances and invalidating the day right after just to reintegrate the range. That's an option today, just going down brutally and restore, and maybe making a candle close today below 6,700. Option number two is basically we keep on going that way. As we're in here, there might be some bearish demand, but if we don't find that bearish demand, we might find it slightly higher, near to 7,200, as we said actually back here. Let's say 7,200, 7,400, we should have some resistance out there. But if we don't find it, and if the market managed to make candle closes in those areas, for example, we might have something to eventually consider being tradable for those who absolutely want to trade the Bitcoin. It wouldn't be a good sign actually, because that would be neither of the two options I'd like to see in the market. As I said, to me, the two most probable options are either we just die in here and making the desert crossing phase. Once again, desert crossing phase not necessarily something that just go in a straight line, in a flat line. Can have some oscillations like that, but those oscillations must remain short-sighted, short-timed, and be fastly reversed. Okay, we reversed out there, we go there, we reverse, should be staying in some in a tiny range mode. So this is the desert crossing phase. Option number two, as I said, is we have another bearish outburst with volatility to chase down stop losses. And the third option, and the least probable to me, would be just to make a bottom out there, higher low than the previous low, and get to close above the previous resistance, making daily candle close above 8,500. That's an option. It always has been. It's just an option that I don't seem viable to use and to trade at the current time. So could very well be possible, but not a possibility I would like to trade. So if you do want to trade this, I see no reasons for you not to do it. But from what I can see right now, if the market is oscillating, we're in a bearish, we're at the end of a bullish oscillation with an overbought momentum below resistances. But as we're in some kind of range mode, that kind of situation can very well produce another up day, crossing above all those things, and we're basically going to make another analysis today, because I don't think the Bitcoin is the big game mover out there, but I think all coins are. And just as you move out to a Ethereum, as you can see in a daily perspective, things really have changed. Right now we've got the exit pattern, and this is something you don't want to avoid. We really have the bears going out in here in a bearish trend that's been lasting from early 2018, which means we're 7 to 8 months into a crashing market that is nearly finding the potential ending patterns out there, which means finding some bullish reactivation on the Ethereum seems a lot more viable to me than in the Bitcoin. This is the reason why I've been buying Ethereums and not Bitcoins for now. I mean, to me, Ethereum's prices, Ethereum context, Ethereum cycles totally respect what I would like to see for a crashing market. Even though I would pretty much expect another down day, another lower shadow candle and brutal reversal, simply because the momentum hasn't yet confirmed. So you've got the exit structure, which means you can buy right now, no problem. To make the buy and hold, really it's a green light. But if you absolutely want to catch the bottom, there's still a probability to make that bottom in the next following few days, simply because the momentum has been retraced to the zero value. We're reaching out to the bearish trend line, and at some point we could very well have a bearish reactivation, going to pretty damn low values. But anyway, to me right now, buying long term is viable on Ethereum. We've got nothing compared on the Bitcoin. We're still in bearish oscillation out there. It's kind of Bitcoin is trying to follow through what's happening in the other asset classes, but as I said, on the other altcoins, and as I said, to me that correlation might be difficult to trade. I know some of you guys will take this one for granted, and the fact that as we had it back then, it's no problem. We obviously will have it right now, and if altcoins are going up, Bitcoin obviously going to go up. This is generally when those obvious conclusions are made that the market is doing the opposite. So I wouldn't necessarily, as I said, be surprised to have a Bitcoin just falling apart where altcoins will just do, but in a very, very low, in much deeper, in very less profound movements. So we could have down days, we could have up days, but I think if the upside is what's about to be chosen, I think Ethereum has a lot more bullish potential than the Bitcoin will have, and therefore this is where I want to put my money. So that's all basically I had to say. Same goes for Ripple out there. We might have found a bottom. As you can see, we've got not enough history out there because of the goddammit, who the hell is lacking of okay, so anyway, we'll talk about that later. So moving on to the other asset classes, we're gonna have a look at the economic calendar. We've got nothing today despite the consumers' confidence from the conference board. And we have to talk about the US indexes. They've been making a pretty hell of a bullish day yesterday, opening at the low, buying instantly, closing at the high, making a historical high with a damn fucking bullish gap, which means Wall Street is all about blue skies and unicorn again. We've been breaking the resistance. I say clap, clap, clap. Great, guys, you've been buying again. I took my stop losses days ago, so I'm now just buying the Russell, but now other indices have been catching up. The only one who hasn't yet made a bullish historical high is the Dow Jones, and you can be pretty damn sure that that's all Wall Street has in mind right now, to just pull that damn Dow Jones to the historical highs to make them fucking headlines to say, oh yeah, hell yeah, we're so strong, we're so bullish that all our indices are trading historical highs, where some other indices are still trading minus 20%. Poor Chinese guys. They're having the economic growth, but they are down the ground because we just opened our mouth with the damn trade war. So as I said, distortions out there, obviously not going to last long. And as it's been profiting to the US economy, it will probably make them lag in the next following days and weeks. So we just patiently wait for that to take place. It's like great for Wall Street because they've been flushing out all the risk, and those risks have managed not to show up. But the problem is, as we didn't price, as we just try to chase stop losses, fuck up the bears and whatever, you know how that works. It's a general pattern that we have at the end of economic cycles. We've got early short sellers, and the market says, oh fuck it, we don't want them, so we're just gonna fuck them, take the stop losses and move higher with those. So this is what Wall Street's been putting at play in the latest few months. We had sellers, and Wall Street said, okay, great, we've got sellers, so we've got stop losses, so we're gonna go higher and fuck them no matter how, no matter what. So as you can see, we've had lots of things to talk about. We've got pretty damn negative news all along the summer, but the market just chose to fuck up the bears and take the stop losses to go higher. So we didn't price those risks, and they might have to be priced at some point. which means you just wait and see, but you obviously don't buy that shit. It really is the worst possible choice you could make. So you just let them do their shit, and I can bet that yesterday Apple was bought, and yes it was. So Apple new historical highs or not? Not yet, but that's about to come today. So you just let that damn stupid trading take place. They're trying to buy everything that is just nothing you want to invest on. So it's the more stupid the scenario is, the better it is, and the more it works out. So you just let that stupid kind of trading at play. There's not opportunity in every there's not always opportunities, and at some time just waiting for decent opportunities is the best choice to make. This is basically the one I'm doing right now. I don't see any decent opportunity, only stupid trades, and I don't want to get myself into those. Moreover, because I'm heading into vacations and I don't want to be into dangerous trades that could reverse in a few hours. So I just want to be patiently waiting out there to have some interesting prices to sell again, and that may not be occurring before October or at least the end of September. So I'm just gonna let them enjoy a pretty damn month of low volatility, and as I said yesterday, and I stand on this, as long as the VIX hasn't been making a resistance and breaking it, so I want the VIX to build a resistance probably near 13 to 14 approximately, make a new low, and then breaking that first resistance. Whenever we have this, things will return to interesting potential levels, and at least the resistances will be ready again to be sold. But right now there is nothing to fear. Wall Street's just fucking euphoric. We've been spending the entire summer crushing down the volatility, manipulation after manipulation. The market remains bearish. We've got too many short sellers on the VIX for this to just rise. But the moment this will rise, it will just be like an explosion, like a volcano, and it's something that no one will be able to stop. So I just wait for this to come. Whenever this will come, we'll have interesting trades to make. Now that we've been messing around the gold and silver, they are finding bottoms, which means the metals might be out of troubles, and precious metals might be used as cover. But as you can see, Wall Street's not just buying eyes closed without a sense of risk. We clearly see that the risk is here, the tension is there, and Wall Street's trying to buy, but it's covering itself. In the same time, trying to buy some yen, trying to buy some gold, but it's just we're going up, but we're going up with lots of problems behind that we haven't solved yet, which means probably interest rate will rise, the 10-year yield will explode above 3%. Yes, the equities might be raising as well, but this is really a short-term epidermic move that will generally reverse brutally without a single problem. And all those prices we've been making in the previous year, in the previous months in Wall Street, all of this will be erased in just a few days. I mean, just be straightforward in here. Whenever we'll erase that and retrace those prices, there will be not a single support out there, just because we haven't been finding support out there. We've just been fucking up the sellers. It's basically, okay, damn, sellers have been exiting, so it pushed the price higher. In here, we fucked them up, took the stop losses to go higher. So those who hold it, they're bought in here. It's just like that. I mean, those who've been selling in here, we're the one who are buying in here. So it's just a market that's been chasing stop losses. Sellers fucking them up, they're rebuying, which means we've got buyers. Same thing goes in here. Been selling out there, didn't work, we have to rebuy ourselves out there. So this is stop losses and just bears who are making the market moving higher to higher and higher. So it's nothing close to having bullish guys supporting that market. It's just a market that just wants to fuck up sellers and go higher with them. So we're just patiently waiting for this to terminate, and this might be coming pretty soon. Regarding the forex market, we've got euro-dollar still trying to figure out a market top, but we're nearly reaching the red area, so at some point we're going to terminate this pretty soon. GBP still trying to figure out, but we hasn't. So today's market catalyst was kind of a non-event. try to rally, but not necessarily that big of a rally. So it's kind of a mess in between, so you don't really want to be too much leveraged in out there. EURJPY, I'm remaining bearish in there. We're reaching daily resistances, and we're not going to break those one up. So we've got a new breakout area to forecast out there. So there's a breakout area in $130. So we might just try to go there. Try to at least make an upper shadow candle in there. So this is the area you want to be a seller on EURJPY if you are a breakout trader, because we're just going to wait for the breakout to try it out, fail it, and this is, I think, where I'm ready to put some additional leverage. I'm still trading the stupid summer trading mode, which means us versus the market makers, and I think the market makers wants us to go up here. So I'm just going to patiently wait to get into putting some more money out there. I definitely want to short the EURJPY more than I'm currently doing. It's just that in order to put some more money in, I'll just need further information. So I'm patiently waiting to either have the prices getting there and failing the breakout, or making a bearish engulfing pattern. So I've been putting that alert using a pro alerter, and I've been setting close crossing oh fuck it, it's not gonna work, crossing under low. I'm just going to use the cross. So close crossing the lows of day minus one. Okay, so it's the I'll have an alert whenever this will cross down this, and whenever the next day eventually crosses down today's low. Okay, and I'll wait for the bar close. I want the bar to close at the lows in here. Okay, so wait for bar close on a daily basis, and I'm just going to delete the previous one. So damn it, where is this one? Yes, so only once, yes, but I'm using pro alerts, and I said EURJPY, the engulfing pattern. So whenever I have this, I'll go into more leverage, more downside leverage to the EURJPY, as long as we don't make a daily bearish engulfing pattern. Don't want to be putting more money out there and just waiting. I'm already maximum leverage out there, so I don't want to go into the red zone where the market maker will be able to take down my stop losses. AUDNZD is still trying to fucking collapse. I don't really get that shit. It's like the market is doing the exact opposite of what it's supposed to do. But that's how it is. As I said, this is summer trading. The market makers are trying to play with your nerves. I'm not going to surrender anything out there. It's just I might have to take some additional profits on the AUDNZD. But I don't want to have a bearish engulfing again today. So we've been breaking yesterday's high. As you can see, we've been slightly breaking it up. I do want the market to hold the bottoms. We shouldn't go lower than that. Okay, we should remain above that price and find some support out there today, and trying to make ourselves throughout the resistance. For now, we're still failing we're still failing on this part, but I'd like to see that happening. In a daily perspective, we clearly have an interesting pattern. We've been terminating a bearish oscillation on sine wave. Momentum has been retracing as well and making new lower low where the prices hasn't, which means this is what we call bullish hidden divergence, and we should have it reactivating. So momentum hasn't detected this for now, but we clearly have that, and this is a bullish confirmation on momentum. So we've got bullish momentum versus bearish cycles. So I'm basically waiting to have a bullish cycle restored. Would like to see a range building in here. The bulls restoring the bullish cycles, and the next bullish cycle with bullish prices will be interesting to get toward resistances. So I remain bullish in there, but with some caution, because something political is happening in the AUD. I don't think that's the big of a deal, even though it might be. I don't see it that way. So I'm kind of preferring to remain bullish in this, because I think what's at play in here is totally bigger than just the Prime Minister at play. And just make sure we're not trading just AUD, we're trading the couple AUDNZD, and in the long run this is clearly a range, and I think we've found a long-term bottom out there that will just restore us to previous pricings in which AUD is more interesting to you to NZD. I'm also switching on the Tesla's project, Tesla's scenario, simply because Elon Musk has been reversing, he's been going out, he's been canceling the getting private thing. So as I was expecting him to just move on, to move forward, going crazy and trying to fight the market once again, it's obviously not what's happening today. It's been reversing, so I have to adjust as well. I think the pattern I was trading was heavily aggressive regarding its potential dangerous psychology. He showed me he wasn't that stupid, and that's good for him, but I have to adjust the scenario as well on my own side. I cannot remain that aggressive. As it's been moving backward, I think I have as well to do it. So I'm just reducing the risks out there. I'm not taking reinforcement unless we're getting back to the red area. I'll remain bearish on this one, no problems, no questions asked, but the targets have changed as we said yesterday. There's nothing else to say despite that, so it's kind of a wait and see right now. In Wall Street, there's no reason to buy. Please don't do. Just let the damn stupid traders take those prices if they want to trade them. Really, nothing you want to trade unless trading it in a very short-term perspective. I think right now the most interesting is happening in the forex market, but the problem is that the market makers are pushing prices pretty damn fucking too far. So it really needs us to be patient. I mean, it's just like the euro dollar. We had nothing to deal with those prices, so we're now returning to the mean, kind of ranging to expect, and then we're going to go bullish. It's just we're going to have a bullish trend as stupid as the bearish trend was. I mean, it's like the market just died right now. The market is going to trade fucking stupid, and it's like it's going to be like that forever. It won't be. It's just the market is really under heavy high tension. And this is what I told you earlier. I can feel that tension. We are nearly at the most tense situation we've ever had into markets, and yet everything is to blue signals and to green signals, green lights, blue skies, unicorns. That's what the market shows you, even though we can all feel that things aren't good and there are heavy problems ahead, but we don't want to face them right now. So really be clear about that. Otherwise, you're going to take that lesson with a big loss. You don't fight the damn market when it's in that stage. Okay? When the mood is this, to fuck up the short sellers and go as high as we can, no matter how, no matter what, if you try to fight that, you're going to end up broken, which is not the case out there. We're just here to make money, not to change the market, not to make it rational. Don't do that. If you're the kind of guy who try to fight things, you don't fight yourself out there. You just let it go. Let them do the stupid shit, but take a double amount of money in the end. That's all we care about, okay? You really have to understand that, because if you try to play out this to see for yourself, believe me, I know how this ends. I've been there before. It's not going to be pretty. You don't damn fight the market. You just let it go to the stupid pricing where it's gone too far, and you just take the money in the end. But it requires a lot of patience before. Anyway, that being said, I've been covering everything I had to tell you today, so we're going to move on to the comments, and there's not that much today. So when we come back to home, I'll be back home in September the 5th. So probably not going to make a show on that day, but probably the day after. So consider me back home for Friday. No, on Friday morning, for Friday the 7th. So yes, I'm glad to have your comments, guys. So thank you for coming back each and every day. I'm pretty glad you guys doing this, and we just keep it that way. But for now, let's be really straight. The cryptocurrencies are not that much of interesting. Stock market is fucking damn boring and dangerous. The forex market seems like being the field you want to play into, but the problem is that the market makers are fucking up out there. So it really isn't the best timing to trade. We're summer trading, so I'd suggest waiting a couple more weeks to get into more interesting trading scenarios. Right now, it really is, if you want to do trade, just do leverage by divided by 2, put further stop losses, but it's not the time to get aggressive, reinforcing position, having strong convictions. It's not the time to do it. Okay, so just really assess the fact that weather is great. Go enjoy some barbecues with your friends or anything like that. But just if you have anything else to do, just don't trade. Okay, it's not the time you're going to learn interesting lessons. What we're experiencing right now in terms of pricing is more like, as I said, the casino trying to make itself at work each and every day, putting the lights on, expecting people to get to come down here to play, but basically nobody's trading right now. So really waiting to have prices returning to the mean is all we can expect, and this is already what we're trying to do. Bye guys, and see you tomorrow.